And Deborah, you do actually deal with numbers in your day-to-day engagements. If you're looking at these interest rates, are they fair compared to other markets that Kenya is based with?
The sentiment on the ground is that I think banks have been enjoying huge profits. I think the Kenyan banks have been making more profits compared to their peers. But now, in terms of pricing of loans, or how banks tend to price their loans, it's usually dependent on their deposit base. So if you have expensive deposits, then definitely you're bound to have high lending rates. And that's why we're seeing the likes of the tier 2 banks and the tier 3 banks having higher lending rates compared to the likes of the tier 1 banks.
There's been a feeling from most customers that banks are working in collusion to fix these interest rates. From where you sit, what's your view really, Deborah?
I think the issue here is in terms of the retail networks for the banks. So we have the banks who have a large retail lending base and a funding base, tending to be more profitable or having the best scope of operating in such an environment compared to the banks which don't have a large retail network and a lending base. So it all depends on the outreach and the bank's retail network. That's why we are seeing these aspects of market dominance coming into play.
So what should you expect moving forward when we see the Competition Authority perhaps coming up with a verdict of saying banks have been price fixing? What should happen in such a situation?
I think what is happening is that CBK is trying to come up with a standardized pricing model, and also it's trying to enhance transparency with regards to the lending rates. And also another factor is that we are likely to see interest rates coming down. There is mounting pressure on banks to bring that down. So definitely going forward, we're likely to see interest rates coming down. But also I think this is going to be short-lived because we're also nearing our election period, which is in March. So in as much as we are likely to see the rates come down on the mounting pressure from the CBK, we're also likely to see a spike in those rates come September or in the last quarter of this year, due to the factor that we are now heading towards the election period.
In this conversation, Deborah, where do the customers stand in the event we see interest rates coming down? What does it mean for customers like you and me, as well as for the economy at large?
So in terms of the consumer, of course, the consumer benefits from this. As I mentioned, it provides a good comparative base so that you're able to make an informed decision when you're going to apply for your credit. From the bank's perspective, it's a mixed bag. Of course, if now a scenario whereby lending rates are going to come down, definitely the ones who are going to take the hit will be the tier 2 and the tier 3 lenders. And definitely if I'm an investor in the exchange market, I would tend to be skewed towards the tier 1 lenders who are best positioned to benefit in such an environment.
Speaking about people benefiting, how critical is it for customers to actually have fair sets of interest rates when it comes to investments? Because we've seen a lot of SMEs are relying on credit. What does this mean for SMEs and generally growth for Kenya as an economy?
So definitely what you'd be wanting to look at if you're going to apply for credit at this point in time is you need to understand where are the interest rates going. And in as much as we have the government lobbying and also the CBK pressuring the banks to bring down the lending rates, there are also other factors that we have to look into. I mean, the CBK has to monitor the inflation levels in the country. Yeah. They also have to look at the currency levels in the country, and they have to ensure there is a macro stability overall. So in the case of a consumer who does not have much bargaining power, what is going to happen is that now you have to make an informed decision whether the money that you're getting out of the bank at this point in time, are you going to reinvest it at a higher return than what you borrowed it at? So the outlook is that interest rates are going to come down, but we are also going to an election period. So would you rather take out money now and experience higher lending rates later on in the second half of the year? So it's actually a mixed bag.
I like the fact that you're saying it's actually a mixed bag. And Deborah, still keeping it with matters banking, if you look at the general markets, we've seen interest rates being a touchy subject. Even members of parliament at one point did try to come up with a bill, the famous Donde bill, that sought to set a cap on interest rates. Do you think it's time we revisited that conversation?
I think that would be a difficult move to have, or I think also CBK came out clearly and said this is not the appropriate way of trying to bring down the interest rates, because as a bank, as I mentioned, banks have different ways of pricing that loan that they're lending to the customer. First of all, they have to look at their deposit base. So if you have a huge chunk of your deposits in wholesale and term deposits, definitely you're going to charge higher rates compared to a bank that has a wide retail network, and meaning that if you have a wide retail network, it means also your funding base is much cheaper than a bank that is sitting on wholesale and term deposits. So as a tier 2 lender, for example, the like of Diamond Trust Bank, I sit on 70% of my deposits in wholesale and term deposits. Definitely when I'm pricing, when I'll be giving out a loan to you, I will price it much higher than KCB, whose deposit base is mostly sourced from the current accounts and the savings accounts, which tend to be much cheaper.
So as we wrap up this conversation, Deborah, what should people look out for when taking up a loan? Because at the end of the day, you get these long forms that you're given by the bank that you just turn to the last page, put in your signature and say, I want the money. What should people look out for?
So I think first and foremost what we should be aware of is that whatever CBK has published in their website is meant to be a guide. So there's probably going to be a premium, a risk premium added onto what we already have published on the website. So probably there will be a premium on the management cost and the cost that the bank is incurring when it's lending you the money. So that should be used as a guideline, and it shouldn't be pinned down as the actual lending rates that the banks are using to lend to customers. So we should first be aware of that. Secondly, as I mentioned, is as you're taking that loan, you also need to be aware of the other factors which are coming up later on in the year. As I mentioned, we're going to an election period. How is the inflation rates looking? How is currency looking? Because these are all these factors are intertwined, and they're definitely going to impact on the interest rate levels of our country. So as a consumer, you need to make sure as you're going for that loan, what's your need for that loan? Is it a loan that I'm taking out and I'm going to reinvest and get higher returns from it? And is it a loan that I can be able to sustain if there is any shocks in the market? These are some of the things that we need to look out for.
Many thanks there, Deborah Muriuki, a banking analyst with African Alliance. Many thanks, and thank you for speaking to us this afternoon regarding this particular subject that a lot of Kenyans have an interest in. Many thanks there, Philip Keitani, for that interesting story on mobile apps for dairy farmers. I hope you've learned a thing or two and you should embrace it. Well, moving on, Airtel Kenya has partnered with United Bank of Africa, UBA, to provide mobile-based financial services to Kenyans through virtual savings accounts dubbed Akiba Mkononi. Under the partnership, Kenyans will open and operate savings accounts with UBA Bank from the convenience of their Airtel Kenya mobile phones and earn customers' interest rates of up to 7% per annum. This cements collaborations that telecom companies are having with banking institutions to encourage easy transfer of funds from bank to mobile phones, make quick airtime purchases, view account statements, and make account balance enquiries.
The savings product, we will also be launching the mobile banking product so that customers who have UBA accounts can move money from the bank account to their Airtel Money account and vice versa.
We're very pleased with the partnership we're having with UBA. UBA is the only bank with whom we have a very interesting savings product. This brings our total banks in the country who are connected to our Airtel Money mobile platform to 12.
Akiba Mkononi is really a product that's designed to help Kenyans to save. You only build wealth through savings, and This just gives you the ability to do it very conveniently off your phone. We shall be able to pay you interest of up to 7% on all your savings, which is very generous, whilst also making it very easy for you to be able to access your money whenever you need it.
Some good news there for consumers. 7% interest rates, something to think about. Well, and with that brings us to the end of KTN Business Today this afternoon. My name is Abi Agina. Coming up next is News Hour.